Charlie Munger is a world-famous investor, and he's one of the key reasons for Berkshire Hathaway's continued success over the past few decades. He's built a name for himself as Warren Buffett's partner in crime, his right-hand man who never fails to impress. But he is also, in his own right, an incredibly successful investor who does some things on his own. He started investing in China just over a decade ago with BYD, an electric car manufacturer, basically Chinese Tesla. He put $200 million into the company in 2008, and that stake has now turned into $6 billion. Now, as turmoil in China continues with Evergrande and the impending collapse of the entire real estate sector, the CCP flexing their power with the DD IPO, Jack Ma and the Ant Group IPO, Chinese stocks are falling, including Alibaba. Now, you probably already know this, but Munger is actually very bullish on Alibaba, and he made it 10% of his portfolio earlier in the year. What you probably didn't know is that recently, over the last quarter, he has now doubled his position in Alibaba, which now represents 20% of his portfolio. Needless to say, Alibaba is no small fish in his investment strategy. It's one of the major players, and he's very clearly very bullish on it. Obviously, there are lots of pros and cons to investing in Chinese companies, and Alibaba in particular, and that's what we're going to cover today, along with why Munger might be doing what he's doing. But really quickly, if you're new to the channel, make sure to subscribe. If you like this content, make sure to like the video and leave a comment for the algorithm. Also, make sure to check out our Patreon, where you can join our private investors community, gain access to loads of exclusive content, and support the channel.
You and your friend Li Lu have been very optimistic with respect to investing opportunities in China. BYD has performed spectacularly for Berkshire since its initial purchase in 2008 and is currently valued at $5.8 billion. The Daily Journal recently bought a large position in Alibaba after founder Jack Ma had been reprimanded by the Chinese Communist Party, and Ma's other company, Ant, was not allowed to proceed with its IPO. What are your current thoughts on China and whether the communist leaders will allow businesses with strong leadership to flourish in decades to come?
Well, I think that the Chinese government will allow businesses to flourish. It was one of the most remarkable things that ever happened in the history of the world when a bunch of committed communists just looked at the prosperity of places like Singapore and said, the hell with this, we're not going to stay here in poverty. We're going to copy what works. And they changed communism. They just accepted Adam Smith and added it to their communism. They said, now we have communism with Chinese characteristics, which is China with a free market with a bunch of billionaires and so forth. And they made that shift. They deserve a lot of credit. Warren and I are not quite as good at that as changing our minds in many cases.
Yeah.
And that was a remarkable change coming from such a place. And of course, it's worked like gangbusters. It had this enormous growth in the average income of the average Chinese. They've lifted 800 million people out of poverty fast. And there was never anything like it in the history of the world. So my hat is off to the Chinese. And I think they will continue to allow people to make money. They've learned it works. The Chinese, I loved what the guy said in the first place. I don't care whether the cat is black and white as long as it catches mice. That's my kind of talk.
In that list of the 20 most valuable companies, just 3 are Chinese. Now, if you're looking out 30 years, how many do you think will be Chinese? My guess is more. But I don't think they'll top the United States. But who knows? It's amazing what has been accomplished, and
yeah, really amazing.
And they found what works. I mean, there's nothing like finding something works in order to sort of reinforce ideas over time, and we'll see what happens. But I would bet there will be more than 3, but I will bet the United States has more than China has too.
So even though that video is now a couple months old, it seems pretty clear that both Munger and Buffett are very bullish on China, and on the surface, it's easy to see why. BYD was their first real venture into China and Chinese stocks, and it went spectacularly well. Obviously, they're going to continue to try and replicate that success, and they're doing that with Alibaba. They both see that China is still a growing market and a growing economy, and that it's doing well in their eyes, so they want a piece of the pie. They also point out that China wants to be a wealthy country because it means the country is more powerful. And China also knows that to be a wealthy country, you have to allow businesses to grow and flourish, along with entrepreneurs and capital markets. But this is where some flaws start to emerge and where I start to disagree with what is being said, specifically by Munger. Before we get to that though, I'm going to quickly establish what the pros and cons of Alibaba are and why it's such a popular stock pick right now. So there are obviously a lot of benefits to investing in Alibaba. Right off the bat, they have an incredibly strong moat. Now, for those who don't know, a moat is basically a barrier to entry or an obstacle that prevents other companies from competing with Alibaba. It's very difficult for another company to compete with them because they are so well established. They have both the consumers and the producers working with them, and they have a chain of different businesses that work together to benefit each other. The strongest part of their moat, however, is from international companies. The truth is that Alibaba is pretty much just Amazon 2.0 from China with a bit of Apple Pay chucked in there. But these foreign companies like Apple and like Amazon are literally unable to compete with Alibaba because the CCP said so, which means Alibaba is pretty much unchallengeable in China at this point in time. They are also still growing very quickly, which is obviously an appealing trait for an investment. They've just grown their revenues by 22% over the last year, which is pretty crazy for a company of that size. They're also, at least when looking at purely the numbers, very cheap. It's no secret that if they were an American-based company that worked and made their revenues in the US, then their share price would literally be 3 or 4 times as high. Now, while we're based in markets that are seemingly valued on hopium and nothing but thin air, that's a very appealing trait for a company. Take a look at Netflix or Tesla, and a lot of people struggle to justify their valuations, but with Alibaba, that isn't really the case. In short, the pros of Alibaba are basically the intrinsics of the business. They are statistics or numbers like their revenue growth or their valuation from a discounted cash flow analysis. And if numbers are all you care about, then Alibaba and actually the Chinese markets as a whole is probably quite appealing to you. Of course though, it isn't all good news. There are definitely some cons to invest in Alibaba. And just because the numbers are so good, that doesn't mean they tell the entire story. If they did, then Alibaba wouldn't have been dropping in value every day over the last year. Well, as expected, pretty much every negative surrounding Alibaba comes from the CCP. Right off the bat, the CCP and Xi in particular don't seem to be very happy with Alibaba. It started with Jack Ma saying some things out of turn, but in reality, it was really nothing major. He said the banking system needed some improvements. That's it. And the CCP basically imprisoned him and threatened him with death. They stopped Ant Group's IPO, which would have been the largest IPO in history. DiDi's IPO was sabotaged by the CCP because they dared to list in the US instead of China, something which really shouldn't be punished and would not be punished in any other country in the world. Gaotu was destroyed because they charged money for a service. In reality, the CCP just wanted more control. That's why they nationalised the education sector, not for any common prosperity. Now, the CCP shills here on YouTube will tell you that you should just invest in the good, nice, agreeable companies that don't argue with the CCP, but they are forgetting one crucial thing. It is actually quite easy to predict what 1 million people will do with the right data and the statistics. It is, however, impossible to predict what any one of those 1 million people will do, regardless of what information you have. Now, China isn't just a one-party state. It's a one-man state, and that man is Xi. No one except for Xi himself knows what he will do next, and no one, not Munger, not Buffett, and not Dalio, can predict what he will do either. Another important thing to note is that Xi Jinping is not Deng Xiaoping. He is power-hungry and willing to destroy business and wealth to preserve the influence of the CCP, and he's literally done it multiple times in the last year. Out of thin air, he decided that Alibaba owed them money and stole $15 billion from the company under the guise of common prosperity. That money belonged to the company, its investors, and its shareholders, not Xi, yet he took it anyway. Now, if we just look back at history, Deng Xiaoping set term limits for various positions of power in the CCP to stop a dictator seizing absolute influence, and Xi Jinping destroyed those rules. Once again, you can quite easily predict what a democracy like the US or the UK will do because there are millions of people at play. But in China, there is one man who matters and no one knows what goes on inside his head. Now, while that might be the main problem with investing in Alibaba, it isn't the only one. There are a myriad of other problems with investing in companies in China, like the risk associated with variable interest entities. It is possible that tomorrow the CCP or Xi himself decides that they don't like VIEs and instantly your investments can become worthless. There's even the slight possibility that the United States decides that they don't like VIEs, and again, instantly your investments can become worthless. Now that might seem a little bit absurd now, but just a couple years ago Trump was in power, and it's very plausible that he will be in power again in the future. There's also the fact that Alibaba and Chinese companies in general will struggle to expand outside of China because they've never had to compete with truly innovative companies like Amazon or Apple on equal footing before. Now obviously that isn't quite true for every company in China. This isn't true for every company in China, but for Alibaba I think it is. ByteDance, for example, is truly innovative and very, very successful. And even if other companies like Facebook or Google were allowed to compete with them in China, I think they'd still have a decent chance of coming out on top. Then finally, there's the fact that all of these problems are impossible to know if or when they will happen. We don't know what is going to happen. We don't even have rough probabilities for what is going to happen. It's impossible to decide on a specific discount that is required to make these companies worth investing in despite the problems posed by Xi and the CCP, because no one knows what the real chances of risk happening are. In my mind, there is no adequate discount to invest in China, because the upside is maybe a 3 or 4x of your money, the downside is losing everything. Personally, investing in China also infringes on my own integrity. The CCP is evil. They are committing a genocide before our eyes, and in 100 years, the entire world will look back at us today and ask why so few of us chose to speak out. I refuse to put my money behind a company complicit in the murder and oppression of millions, and I only wish that more people had the integrity to do the same. I know that some of the viewers of this channel are invested in China, but I would ask, what is the appropriate discount to these companies for you? How good a deal does it have to be for you to compromise on downside protection or even your own morality? These are questions that are important to ask because, as I say, there is more to life than money. If you're new here, then consider checking out our Patreon. We're building a community of like-minded investors where we can talk and discuss all kinds of ideas just like we do on this channel. You also gain access to loads of exclusive content that isn't available anywhere else, early access to all videos, private live streams, and you can help support the channel for as little as $1 a month. On top of all that, once we reach 100 patrons, I'm going to hire a full-time video editor to help me put out even more content just like this. If you enjoyed this video, then make sure to subscribe. If you want to help spread the word, then consider liking the video and leaving a comment, and YouTube will do its part by pushing this video out to more people just like you. I really do appreciate all the support you give the channel, even if it's just leaving a like. There's also a link to my other channel, Stoic Crypto, down below in the description that you can check out as well. In the description, there's a link to my favorite brokerage called eToro, where you can trade stocks and shares, crypto, commodities, foreign currencies, and more, all for 0% commission. And there's also a link down below in the description to BLOCKFI, where you can get up to $250 in free Bitcoin, and you can earn interest on whatever crypto you hold, whether it's Bitcoin, Ether, or stablecoins. You can earn as much as 14% interest a year. Thanks for all the support recently. Thanks for watching. Until next time.